Hello, welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis, and do not forget to check out the Forex analysis playlist on my YouTube channel for the analysis of other pairs like Euro USD, GBP USD, USD JPY and many more. So let's get started. So this is the Forex chart of gold USD in front of us right now, and as you can clearly see that after the market opening on Monday, market is still trading in a narrow range here. If you have watched my previous video on gold USD, then you can easily recognize these lines and levels, and if you have not, then do not worry, I'll be explaining them again. So you can see that I have got mainly two lines drawn here on the chart. First and foremost, 1750 which is the support for the market, and 1790 which is the resistance for the market. As we all know, because if you have been trading on gold, then you know it pretty well that 1750 was a support for the market, but around 2-3 weeks ago, when there was a sharp fall here, it broke the support. So the support became the resistance here, and the same resistance became the support again. Therefore, right now 1750 is a support for the gold USD chart, and apart from 1750 level, we do not have any proper support here in the chart of gold USD right now. So 1750 is very important for gold USD. But on the other hand, we have 1790 which is the resistance for the market. Previously 1790 was a support, then right now it has converted itself into resistance. So 1790 is the resistance and 1750 is the support. Clear? Okay, and right now you can see that market is just trading near the resistance. Generally, in a situation like this, we should always short the market, because the basic rule of the market says buy at support, sell at resistance. But you can see that for the last 2-3 days, market is trading near the resistance, but it is still not going down. Therefore, something is not right here, is not it? Yes, try to understand the market psychology here. Try to understand the emotion behind these candlesticks. Market has reached, market has reached the resistance level. What is resistance? Resistance is a place where concentration of sellers is more. Okay, resistance means a place of sellers. Sellers are present in this level. As a result, this is called as resistance. Market is standing at resistance at sellers level, but still price is not coming down, which clearly signifies that buyers are also there in the market. Buyers are present in the market and they are giving a tough fight. They are trying their best to take the price upward, and still there is a battle going on between the buyers and the sellers, and nobody has won the battle yet. As a result, you are not getting anything for the market, because the buyers have not surrendered yet. They are still giving their best fight. As a result, market is not coming down, though market is standing at the resistance. And if we look at the Forex sentiment meter here, this is the Forex sentiment meter. You'll find the Forex sentiment meter on my website avilashhazarika.com under Forex 101 section. In the Forex sentiment meter, you can see that 48% retail traders have taken short position and 51% retail traders have taken long position. So retail traders are also very much confused. The ratio is 48:51. So they are also not sure in which direction market will be moving. Therefore, my dear friends, they are also in dilemma. And as you have already understood, that there's a battle going on between the buyers and sellers, so we must wait for some time until and unless we get a clear direction. And one more thing, recently I have launched a pro trader membership program just for $15 per month, where I'll be sharing all the best trading opportunities on the market available. I'll be bringing all the opportunities in front of you on regular basis. If you are interested with the pro trader program, then just go through the information, and if you want to subscribe, then just hit the subscribe button. I'll get back to you on WhatsApp. Anyways, let's get back to the chart again. So what should be our strategy then? The strategy is simple. We'll have to wait until and unless market gives a clear-cut direction, because see, market is flat here right now, and As we all know, volatility shifts in the market, which means that market always move from higher volatility to lower volatility and lower volatility to higher volatility. If a market is very volatile or if a market is extremely volatile, then market will take risk. Okay, market will take risk because market is just like us. If you run for 200 meters, 300 meters continuously, you will breathe a little. You also need to take risk. The same thing happens to the market also. If market has run for a while, then market also goes flat. Similarly, if market is flat or if you do not see any movement in the market, then be prepared to get some action, to see some action on the market, which means that if a market is flat, it means that market is gathering strength to go either up. That doesn't have the direction is not a guarantee, but just be prepared that market will be giving you some good moves. You can see that in front of us only. See, market was flat here. Okay, market was flat here. The volatility was extremely low. After that, just see, there was a boom, there was a fall in the market. Again, when after this sharp fall, market was flat for some time. It means that market took rest. Again, you can see that after taking rest, market move up. Market took rest here again. Again, market will move up. Again, market move. And right now, market is taking rest again. So it means that market will be giving you some good moves. But till that time, you must wait for some time and just keep your eyes on the chart of gold USD. Just wait for the perfect opportunity. Wait for the market either to go above this line or go below this line. You can see that I have also drawn a line here. This line is not that significant. Okay, this is just the line at the low of these candles. Line I have drawn at the low of these candles. Okay, you can also draw a line like this. Okay. So your strategy is simple. If market breaks this line 1790 level, okay, if market crosses 1790 level, wait for some time and see how the price is doing, how the price is reacting. If you see that market has crossed the level 1790 level with good amount of volume and all, go for it, go for a buy. Okay, you can easily go for buy if market crosses the level. And if market crosses this line 1774, okay, you can also draw a line like this, or if you see a good moment towards downside, you can just short the market. But till then, wait for the perfect opportunity. Do not do any silly mistake. Wait for the market to give you some good move. Okay, because volatility always shifts. Market always move from high volatility to lower volatility and lower volatility to higher volatility. And if you look at the chart of DXY, as we all know, DXY has a great correlation with um, gold chart. Okay, and you can see that DXY is in heavy up move. DXY is extremely bullish right now, but if DXY goes down from here, then definitely it will be getting support at this trend line. But still, if it goes down from here also, we will see good buying on the gold chart. And on the other hand, if DXY starts bouncing from here, then definitely we'll see some good selling on gold chart. But whatever, we will see some good moves on gold USD chart. Till then, wait for the perfect opportunity. That's it. So hopefully you've understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See ya tomorrow again. Bye bye.